Polygon Matic at the time of this recording is giving us a bit of a breakdown move after an aggressive bounce from the lows we made on the 13th of January, and all this is happening ahead of some major economic news, which is the CPI, which is happening at exactly 4:30 East African time. And on today's update video, I will be discussing the most significant key areas of support that we need to pay attention to, basing my analysis on the Elliot structures and the Fibonacci's. So make sure that you stick around till the end of the video. And starting the video by first zooming out and giving you a wider recap of what has been happening on this chart, starting from the lows we made on the 4th of November, where we started a very impulsive movement to the upside. And we first picked impulsively in the formation of this wave 1, so a pullback in the formation of this wave 2, a bounce in a wave 3, a wave 4, and then pushed even higher in the formation of this wave 5 in a move that peaked above the 0.77, and that 5 wave structure to the upside completed the formation of this larger Elliott wave count 1. And having picked in the formation of that first wave, I was expecting a bit of a breakdown move in the formation of this wave 2, whose minimum target areas I came up with by connecting the fibs from the low of the first wave to the high of this wave 1. And that gave me a minimum pullback target area for the second wave between the fib level 0.5, and that is the fib level 0.382 and the 78. And that was between the 0.5862 and the 0.3893, the area that I have marked on the chart using this red target area. And you can see that on the breakdown move that we got on the 13th of January, we almost fully maximized this red target area. And there are now high chances that we have a low in place in the formation of this wave 2, and in the next coming hours we can continue seeing higher prices in the formation of this wave 3. And for us to get a confirmation that we have a low in place in the formation of that second wave, we first need to see an impulsive movement to the upside in a 5 wave structure. So from the lows we made on the 13th of January, I believe that soon we should see a 5 wave structure. And at the time of this recording, I believe that we have seen the formation of that wave 1, seen a pullback in the formation of this wave 2, and this bounce over here was the formation of that wave 3. And in the next coming hours, ahead of the CPI, we can easily get a pullback in the formation of this wave 4 before we can continue pushing higher in the formation of these Elliott wave count 5. And the minimum pullback target areas for these Elliott wave count 4 can be given by connecting the fibs from the low that we made in the formation of this wave 2 to the high we have made today. And on so doing, I get a minimum pullback target area between the fib level 0.382 and the fib level 0.5, and that is between the 0.448 and the 0.4395, the area that I have marked here on the chart. So in case of any pullbacks in the next coming hours, this is an area that we need to pay attention to, because we need to continue holding within this area and start another reversal to the upside in the formation of this wave 5. And if by any chance we lose the 0.4395, then we can watch on the last line of support above the 0.4342. And if by any chance we get an aggressive pullback, losing that key area of support over here, then that will be suggesting a more bearish case scenario, and also suggest that we have seen an ABC, much of a corrective structure to the upside, and also increase the likelihood that we are going to continue pushing lower in a move that can easily give us a reset of the lows we made on the 13th of January, and that is the worst case scenario. So for now, I'm still expecting higher prices as long as the key area of support between the 0.4343 and the 0.447 continues to hold. On losing this area, then that will be suggesting a more bearish case scenario, where we can first watch for support above the 0.4194 and also a reset of the lows we made on the 13th of January. So that is all for this video, and I believe I will see you on the next one.